All right. Okay, good. I don't know why I was having a glitch on my end. There's a little bit of a delay. Hello, everyone. Happy Sunday. I didn't realize I was already on. I'm trying to figure out what's going on. But it's such an honor to be here with you guys. Oh, I'm so excited. I'm so excited. We're talking about one of my favorite topics at this time of the year-end tax strategies for this 2025, guys. Thank you all for joining in. For those who are on already, those that are going to be coming on and watching this later, such an honor again to be here sharing my little knowledge with you guys. If you do not know me, I am Dr. Lilly Mbinglo. I am a licensed CPA and I'm the founder of the ARC NPS, a full service CPA firm where we provide accounting, bookkeeping, tax services, startup services as well for businesses, nonprofits, and individuals. And I am extremely passionate about taxes. And it's because when when you're a business owner, there's no way you can function without taxes impacting what you're doing, right? So as you plan, because you're going to have to file and pay taxes sometimes, hopefully, if you can apply strategies to save, but taxes are an integral part of what you do. And so every year, towards the end of the year, I do my best to put a list of strategies that business owners can leverage. To make sure that they're at least, only paying their fair share. I'm not for you trying to do anything that is illegal or trying to lie just because you don't want to pay taxes. I'm all for you being informed because the tax law is meant to serve two groups of people: business owners and real estate investors. And if you fall in this category and you can find yourself a great tax strategist or tax alchemist, as I call myself, those who can really apply the strategy for you, you could really save incredibly much, right, as you plan. So it's my hope that the information I share here will really impact what you're doing, will help you save your taxes. But even if it doesn't apply to you right away, it would inform you. You will be informed. So at the right time, you can apply it, okay? I'm going to be sharing 15 tax strategies, probably more because I'm going to have sub strategies. Maybe all of these, only one might apply to you, and that's okay. The other ones, save the knowledge, save the information, share with other people, and when the right time comes, you'll be able to apply it. All right, let's dive right to it. Welcome again. If you're just joining, this is Tax Conversations with Dr. Lilly Mbinglo, and our focus for today is year-end tax strategies. Okay, things we want to do before the clock strikes midnight on December 31st, 2025. Because once it goes to the next year, once it gets to January, we're very limited with what we can do. But so long as we can get it done before the 31st, we're playing right. All right. So just a little bit of simplification of how taxes work for business people and individuals, so that once you get that basic understanding, you will see why strategies become really core to what you should be doing. Okay, when you're an employee, I think almost every one of us has had to serve as an employee in a company or another. When you work for a company, if you notice, when they pay you, they take out taxes. They take out your income tax, they take out your social security and Medicare taxes, sometimes and then the employer pays unemployment. They take out state taxes as well. And then they give you what is left and you spend it. Okay, that's how it works for employee. You earn money, taxes get taken out, and then you spend whatever goes to you. But when you become a business owner, it's very different. Okay, as a business owner, when you make money, right, that's your revenue, you actually deduct every expense that you incur to make that money, and you only pay taxes on what is left. So unlike the employee who pays taxes on the top of what they make, you as a business owner only pay taxes on what is left. Why is this important? That means for every expense that you incurred in order to generate revenue, if you do not have a system of accurately tracking that or leveraging every strategy that is available for you to be able to maximize these deductions, you will end up paying so much in taxes on your profit because you did not accurately capture your expenses. You did not apply the strategies that have been made available to you as a business owner, and you end up giving that money back to Uncle Sam. All right. So when you have that understanding, you start to realize it's almost it's careless, if you ask me, as a business owner, to not invest in tax planning and tax strategizing. All right. Hey, family man. So let's go ahead now and talk about my top 15 strategies that I want you to apply before the year is over. Trust me, if you are able to do even just the ones that apply to you, I promise you, you're going to go into 2026 completely different. And when you file your 2025 taxes, you're going to be the boss. Okay. You're going to be the one literally telling the IRS how much you're supposed to be paying them. All right. So my number one strategy, guys, of anything I tell you, you see this one, because it's number one, that tells you how important it is to make sure that you get your books in order. Let me tell you something. It doesn't matter how great a tax strategy is. It doesn't matter how great an idea someone gives you is. If you do not know how much came into your business and how much went out of your business, you will never know if those even apply to you. They'll just be good information. So as a business owner, the first thing I want you to prioritize before the year is over is bookkeeping. Make sure that your books are fully reconciled, that you've tracked every income that came into your business, and you have tracked every expense that was incurred in order to generate your revenue. Because if you do not know what came in and what went out, how would you even know if your business was profitable? How would you even know if you should be in business going forward? How would you even know if you're taking advantage of what the IRS is allowing you to take advantage of as a business owner? Those things only start to come into play when you have a solid business bookkeeping system in place. Okay, so when you have a solid bookkeeping system in place, all the rest of these strategies will make more sense, because you will know where you stand and you will know what is applicable to you and what is not applicable to you. All right. So strategy number one, please get your books in order. By now, you should be having your year-to-date profit and loss statement. You should be having your balance sheet. You should be having all of those things where you can look at your January through December and you know, okay, this is what has come in, this is what has gone out. If I'm profitable, how much, what are the different strategies I need to make sure I'm leveraging so I can save on taxes? And if I'm making a loss, what am I missing out? What am I spending excessive money on that I need to fix? Okay. My second strategy for you, and this is so important, guys, is for you to go and do a review of your business entity. All right. This topic, I'm going to break it down into 4 sub strategies. So I want you to review your current business entity structure. First thing, okay, if you have not yet registered your business and you've been operating your business and a lot of money is beginning to come in, first thing I want you to do is at least incorporate, which means either register as an LLC or even a C corporation. Because if you've started running a business that is bringing in money, I want you to make sure you have some kind of protection, and also to start to give yourself some asset protection, right? Where, you know, if something were to go wrong, nobody's going to come for you personally, right? And if somebody wanted to sue you or something, they're not going to touch any of your personal assets. But secondly, so you can also structure the business, okay? So if you have not incorporated, let's say you've been operating as a sole proprietor, this is a good time for you to consider registering that business, okay? The second thing I want you to do, and this is a sub strategy under this one, okay, is under the review your entity structure. Second thing I want you to do is dissolve any entities that you're not using. There are a lot of people that set up businesses and they've been paying state fees for almost 3 years. If you have not used that entity, please go ahead and just dissolve it, especially if you have a partner. Dissolve it. If you guys decide to go back to the business later on, you can. But if you're not yet certain about what you want to do, or you have a lot going on, don't keep that entity open and you're paying money to the state. Go ahead and dissolve it. Okay. The third thing I want you to do as you review your entity structure is, if you're an LLC and you're beginning to make a significant amount of money, this could be a good time before the year is over to make an election to be treated as an S corp. An S corp is such a great entity structure for a profitable LLC, especially if you start making about a net profit of like $50,000. Okay. When you become an S corp, it helps you to save significantly on self-employment taxes. Your profits generally, if you're a single member LLC who is filing on a Schedule C as a sole proprietor, you pay 15.3% of self-employment taxes on your profit, and you still have to pay federal income tax and state income tax. So when you become an S corp, it allows you to save on some of that self-employment taxes, because you pay yourself a salary, you pay an amount of payroll taxes on that, and then the rest of your profit, you don't have to pay self-employment taxes on it. You only pay income and state tax, the federal and state income taxes. Okay, so if you haven't yet become an S corp, especially especially if you're in a service business, like you're an accountant, you're a tax person, or you're a medical doctor, for example, a nurse practitioner who has their own practice. You should be making that election. Now, this is one of those strategies that could cross over to next year, because we could still do the election by March 15th, but you would want to at least run one payroll for yourself before the year is over. So that's why I'm talking about it. All right. And then the last one that I will have that I really want you to think about under this strategy of evaluating your entity structure is to domesticate your LLC. You can call it redomestication, you can call it domestication. A lot of times when people start businesses and they talk to the wrong person, they'll tell them, oh, go and register your LLC in Nevada, Wyoming, because of course they have all these favorable LLC laws. But let me tell you something, you're doing yourself a disservice. Because if you want to register your business, you want to register your business where you're operating that business. Whether it's in owning rental properties, don't go and register an LLC in Wyoming or Nevada, and then you own a business in Texas. You know what's going to happen? You're still going to have to register to operate as a foreign entity in Texas, because Texas is not being treated as a domestic state for your LLC. Even though your business is in Texas, somebody said, oh, go to Wyoming, go to Nevada. Now you'll be paying annual fees in Wyoming and in Texas. Meanwhile, you should have just registered where you're operating. If you have property, register the LLC for where you own and operate the property. Okay. So if you are one of those people that registered an LLC in another state and you live and operate in a different state, please rededicate your LLC. Okay. And those are things that if you don't understand, feel free to hop on my calendar. I do complimentary 15 minutes meetings. I'll be able to provide you some guidance, or if you want us to do for you, we can also do that for you as well. All right. Now, my third strategy, remember the second one had 4 sub strategies. My third strategy is now for you as a business owner. Please bring your ears closer. Maybe you're new into business. Maybe you're just starting out and you haven't gotten a full understanding of how the tax law works. Okay. When it comes to your business deductions, guys, hear me out, okay? The IRS has only 2 laws that they need you to follow. The first one is, for you to be able to deduct business expenses, they have to be ordinary expenses. Ordinary means if I go to anybody who is doing a similar business like you, I should see them incurring the similar expenses. Okay. So if you're a nurse practitioner, you have your own practice, and I go to another nurse practitioner, they have their own practice, I should see ordinary expenses like what? A payroll for your staff. I should see ordinary expenses like supplies, medical supplies. That's an ordinary expense. Okay. But here's the second part of the IRS rule. They want it to be ordinary first. Second, they want it to be necessary. So in order for you to deduct an expense, the IRS wants it to be ordinary and or necessary. Let me explain this necessary part. You could incur an expense in your business that may not be ordinary to your industry, may not be ordinary to other business owners, but it is necessary for you. For example, maybe you're an event planner, right? And you own your own space. Maybe the typical event planner who owns a space in a safe location, they don't have to spend a lot in security, okay? But for you, your event space is in a neighborhood that is not very safe. You could end up incurring a very high cost for security, which is not ordinary to your industry, but it is necessary for your business. Does that make sense, you guys? Now, I always say this because business owners think, oh, there's this list that the IRS provides that you have to follow only that list to write off your expenses. No. Now, once you have understanding, application becomes so much better. So if an expense is ordinary and it is necessary, you hear me out? You should go ahead and be able to write it off. So as a business owner, I want you to go back now and look throughout the year. What were some expenses that somebody may have told you, oh, you can't write it off, but it was necessary for you to incur that expense in order to be able to run your business? This is a good time for you to make sure you're leveraging those, okay? And you're including them in your expense list. So you're not paying taxes on funds that should have been deducted, all right? Then my fourth one for you, and this is so important, you guys, is if you started your business this year, please make a sale before December 31st, okay? Make a sale before December 31st. Let me tell you something. When you start up a business, and I've seen that happen to a lot of people, in the first year of your business, you're reporting, you're incurring startup costs, you're probably dealing with consultants, you get a space, you're paying for rent, and you're in this startup phase and this startup mode, and you're thinking, when I go to file taxes, I can just write off all these deductions. No, you cannot. According to the IRS, you're just in startup phase. You're not yet in business. So you know what that means? They're only going to let you write off $5,000, and you're going to have to divide the rest of that of those startup costs over 15 years. That's 180 months. Who has time for that, right? So in order for you now to establish with the IRS that you were in business, you have to show that you actually made a sale. So please, if you started a business this year and you've spent so much, I always think of the people who go into the healthcare space, for example. They spend so much money to start up, all right? If you're one of those people and you've been so involved in setting up, spending all this money in getting your books in order, please make sure you at least get one patient through your door. If you've been someone who was, acquiring things to sell, and you order things overseas and you've not yet made a sale because you're thinking you want to run a massive sale in January, please make a sale before December 31st. Otherwise, you're not yet in business. And can you imagine if you spent over $25,000 in starting up your business? The IRS only let you write off $5,000, and then you have to divide $20,000 for 15 years and be writing off like 1,000 something. No, that's too much, right? So if I were you, I will make sure I make a sale before the year is over. All right, that's my fourth one. Oh, this is going good. I need to make sure that I'm on time. All right. The next one I want you to do, please, business owners, you guys keep letting me down on this one. I talk about it all the time. I need you to set up a board of directors or a board of advisors if you're a business owner. Okay, so if your entity is a C corporation, or if you've made the election to be treated as an S corporation, you are actually required to have a board of directors. These are the people that you put your heads together with and you make decisions. Okay, now that doesn't mean someone with an LLC cannot have a similar structure. You can set up what we call a board of advisors if you're a single member LLC, for example. Now, the board of advisors may not have the kind of power that the board of directors has, but it's just as important. Now, why is this strategy good? All right, good. Because you can incorporate your family members and your friends on this board. Do you get that? You can bring in your family members. You can bring your adult kids into it. So you know what that means, right? Because when we hold a board meeting, even if we travel to hold that board meeting, everyone's travel now. What does that become? A business deduction. All right. So if you have not set up a board of directors or a board of advisors, please make sure you do it as soon as possible. And if you're not sure who to add, think about the friends you talk to all the time, the family members that you get together to celebrate Christmas, Thanksgiving. Who are those people that really matter to you, right? People that can bring some kind of, input or add value to what you're doing. Even your kids, your grown kids, your teenage kids, how can you pick on their brains? Guys, if you've never set one up, I encourage you to do it. It's such a game changer, right? And then once you have done that, that was my fifth strategy, right? Then the sixth one now, what I want you to do is make sure you hold that board meeting. And what a perfect time to hold it during the holidays, right? So think about it. If you've created a board of directors, you have your sisters and your brothers or your friends, and then they're all flying to come in for Christmas. Now, that could become a Christmas gift to them if you want, but you get to pay for their travel because you guys get to hold that board meeting. You get to talk about these things about your meeting and you document it. Of course, the key here is always to document these meetings, what you guys discussed and what was the outcome, right? So you can choose to do it as a year-end planning for your business. Before you guys do Christmas dinner, hold that meeting from 30 minutes to about 3 hours. Pick on everyone's brain. What do you guys think? These were some things I did this year. What can I do differently? Who would like to work in the business? And those kind of things. Guys, hear me out. All of a sudden, that entire trip becomes a business deduction. Why? Because the day of travel, let's say everyone traveled. What day is Christmas this year? I don't even know. I need to check. Okay, let me see what day Christmas is. Let's talk about that, okay? Let's say Christmas is, this is so bad. Christmas this year is Thursday. Good. Now, everyone travels in on Wednesday, right? Wednesday is the day of travel, is deductible. And then you guys have Christmas, you hold that meeting on Christmas because the whole family is there. You pick on everyone's brain. And then on Friday, everyone is going back out the day of travel too, which is deductible. You just had your whole, look, Please, if you're not leveraging this strategy, you better do it. And you cannot let this year go by, okay? If you do not know how to document it, I have so many books that have templates for you. I have my annual tax planner for business owners. I have these templates for you to document the minutes, document who was in the meeting, what you guys agreed upon. If you want to get even my book on Hire Your Kids, the other one from Vows to Ventures, I put all these templates here because I want you guys to incorporate your family into your business, and you get those tax deductions. And what's a better way to do it than the end of year when everyone is coming together? Okay, please make sure that you're doing that. All right, then the next one is for you to establish an accountable plan. This is my tip number 7. If you've been following, this is tip number 7. Okay, establish what we call an accountable plan. If your business is an S corp or a C corporation, or if you're in a partnership, you can set up what you call an accountable plan. Let me explain what this is. An accountable plan is a reimbursement plan that you set up where your business gets to reimburse you for the expenses that you spent out of pocket. Okay, so think about it. Let's say you drove using your personal car, right, to be able to run, to go see patients in your, your business patients, and all of that. You were using your personal car. Now, because this was insured for the business, your business gets to reimburse you for that mileage. Mind you guys, mileage for next year is 70 cents per mile. That's a lot of money. So if you drove up to 10,000, think about it, 10,000 miles for your business, which a lot of people in, let's say, the home healthcare space, they do, or real estate agents, for example, a lot of them drive almost 20,000+ miles. Imagine driving 20,000 miles in your business for your business, and your business has to reimburse you for that. That's $14,000 that is tax-free to you, because when your business reimburses you for those expenses, you don't pay tax on it, but your business claims the expense. Come on. Oh my God, that's why you got to be an S corp. Look, if you don't know if you need to be an S corp, you should be talking to me, because these are the things that you're leaving on the table. All right. So as a business owner who has made the election to be treated as an S corp, please, I'm calling out on you to make sure that you are leveraging these strategies. Okay, this is so important that you're leveraging these strategies. You're not leaving them to fate. Hold on, what is this happening here? Okay, yes. So make sure that you set up that accountable plan. You list out the different expenses that your business is going to reimburse you for. So let's say you have a home office. All right, if you have a home office, for example, and you use that space to be able to do business meetings, do work for your business, guess what? Instead of you just trying to write that off, let your business reimburse you for that. You calculate the space, divide it over your total home square footage. You calculate the electricity, all of those things, let your business reimburse you. You don't pay tax on that money. That's money coming to your pocket. Please, guys, use this. Now, one of the best ones, and you guys hear it all the time, the 14-day renter, they call it the Augusta rule, right? The Augusta rule is one of the perfect ones under this strategy. Why? Because you can rent your home to your business for up to 14 days. But guys, it's important that you know that your business needs to be set up as an S corp or a partnership for you to leverage this, not a single member LLC. Okay. Now, when you rent your home to your business, and look, you can rent your home to your business to do meetings, you can do brainstorming sessions. We just talked about meeting with your family, right? Now, when you guys meet, you can look at what the average cost for a hotel conference room is. For example, if let's say the hotel will charge you $2,000, guess what? That's the amount that you're renting your home to your business for. Okay, you're renting your home to your business for $2,000, and when you do that, now your business gets to reimburse you, which is going to be on that accountable plan. You're getting how much? $28,000 if you rent your home to your business for up to 14 days. So let's say every month you do a session with your team members, you bring in your advisors, you guys brainstorm together. $1,000 for each meeting. During the holidays, you do an extra one or a couple more. $28,000 is coming to your pocket, tax-free. Tax-free, you guys. And let me give you one more tip before I move from there. When you want to do some of these meetings, plan to do it around holidays or the times when prices for like hotel conference rooms or Airbnb goes really high up, because you're using the value for that day, and then just document it. As always, please document what you talked about, what you did, So that way, if the IRS were ever to come to you, you have this. These are all available to you guys. This is available to business owners. So please take it. All right. I think I've spent too much time on that accountable plan. Let's keep it going. So let's move to my 8th strategy. Okay. My 8th strategy is for you to defer income at this time and accelerate expenses. Now, if you guys remember, my first strategy, and I always emphasize on that, is for you to have your books in order, which means by now you should know how much you've made from January through December and how much you've expensed. So with you knowing what your profits are, you would be able to plan now how to reduce your taxable bill once we start filing taxes. Okay. So now for someone who has made a lot of money, God has blessed you. It's been a great year. And you have a couple of people that owe you money. And it's around the end of the year. You can choose not to invoice them. You can wait to invoice them come January 1st. So instead of sending them the invoice in December, you can defer, okay? So you can wait until January 1st and then you send them that invoice like, okay, guys, I need my money. But you're not in a rush to take it in December because you're already having a significant amount of profit, and we're trying to leverage all our strategies to reduce our tax bill. Remember what I said, right? You pay taxes on your net profit. So we're trying to make sure that we leverage the strategies to reduce our tax bill. But you want to make sure that you know your numbers, so you know what is applicable to you. So if you brought in a lot of money this year and you have people still owing you, you can hold off to January to invoice them. Okay. So that way you're deferring your income. Another thing you can do now is what we call accelerate your expenses. What does that mean? If I have a lot of money sitting in the bank right now, instead of me paying a high tax bill to the IRS, what I will do is, and which is allowed, prepay some of your expenses. You can actually prepay some of your expenses up to 12 months. So like your rent, for example, you can go ahead and prepay your rent up to 12 months before the year is over. Things like insurance, you can just pay for the whole year ahead of time. Whatever you can prepay, you're better off putting your money to that than sending it to Uncle Sam when it's because you did not strategize. All right. But you see what I said? We have to make sure it is done before December 31st. All right, you guys. So make sure you do that. Let's move to number 9. Who is ready? Who is ready with number 9? Hire your kids in your business. All right. If you bought my book already, I'm sure you had some really good gems. I hope you did. And I hope it's been helping you, to go ahead and include your kids in your business. I think it's such a great strategy. There's no reason any business owner with kids should not have their kids involved in their business. Okay. I mean, not only are you teaching them a work ethic, but you're also helping to prepare for continuity for your business. There are a lot of business owners, when they pass away, nobody knows what was happening. Nobody knows who they made deals with. But if you brought your kids on board, they can get a good amount of insight about your business. All right. But now let's talk a little bit about this strategy. So this strategy is really great for someone who is set up as a single member LLC or a partnership where the husband and wife are the owners of the partnership. There's no third party. All right. So when you guys are together, what happens is you can hire your kids to work in your business. A good age is usually from like 6 to 7 all the way through 17, 18. Okay. Once your kids work in your business, in 2025, for example, you can pay them up to $15,750. That's a lot of money. Okay. If you paid your kids up to that, you don't have to give them a 1099. You don't have to give them a W-2. None of that. Yet your business gets to write off that expense. So if you're a family where you have 3 kids between that age of 6, 7 to 17, think about it. That is $45,000 in business expense that you're getting ready to write off right there, right? If you paid them even just $15,000, then imagine if you did the full amount. Even if you did $12,000, that's about $36,000 that your business gets to write off. So if you were paying them $1,000 a month, guys, this is so important. Please don't leave these strategies on the table. It's there for you. You're spending money paying for after school activities. You're spending money sending them to all these different camps. They can earn it. They can earn it. Get them to work in the business. Save that money for them. Now, to even add icing on the cake, take $7,500 of that money, put it in a custodial Roth IRA. This money will be growing tax-free for your kids. By the time these kids get to one reasonable age to withdraw, they'll become millionaires. See, we did not know, our parents, they were not here, so they didn't pass that to us. Now that we know better, we better do better, and prepare these children to become future millionaires. When you see all these millionaires, you'll be thinking that they came from broke homes. Their parents had been setting them up, and that's why they had money to start up those big businesses. All right. But keep that in mind. Just make sure that, okay, the work that you set up your child to do is reasonable, is work they can do. You're paying them a reasonable amount, and you also document the work they're doing. And they're the ones doing the work, not you. Not you doing the work and claiming it's them. Okay. Please grab my book. It has all of these inside. I give you all these in detail on how to go about it and make sure that you're leveraging this strategy for your good. And I have so many other tips in there on how you can make the money that they earn go even further. All right. So make sure you take advantage of this. This is a good time to talk about it when you hold that end of year meeting we talked about, right? When you hold that end of year meeting during Christmas, you guys talk about which of the kids are coming to the business or evaluate their work. Or if your kids are older, have them serve in the board. Okay. Those are some of those strategies that you have to be leveraging. Let's move on to number 10, you guys. Is this good? I hope it's helpful. I haven't had time to catch up on questions, but I'll get to that. So number 10, please, if you hired any independent contractors and you paid them over $600, don't wait for the year to end before you get the W-9s completed, please. Okay, make sure that they complete their W-9s now, because what happens to a lot of business owners is they usually delay, right? They usually delay to have their independent contractors to complete W-9, and then when January comes, the 1090, those people disappear. You don't see them again, and we sometimes will have a lot of clients, they are stressed out. Or this is even the worst one. Independent contractors sometimes will give you the wrong social security. But if you get it ahead of time, we have ways that there are different systems you can leverage to verify. So that way, when you issue them that 1099, the IRS doesn't come and penalize you for giving a fraudulent number or thinking that you're trying to commit fraud. Or if you don't report it, then you get penalized. So remember, if you paid someone over that $600 threshold, it's changing as we move into future years. But for now, if you paid someone over $600, please make sure they complete the W-9, especially if you still have another payment to give them. Don't give them their final payment till they complete the W-9, okay? That W-9 is the form for the people that served you as an independent contractor, and then you will normally complete it, file it with the IRS, so the IRS is aware that you paid these people. A lot of business owners, sometimes we don't report these things, and then when there are certain credits we could take advantage of, we don't qualify because we were not documenting things like this. So I really want you to think about that, okay? Let me move on. All right, guys, I need to make sure that I get this in time. I was reminded that I have to get this in 45 minutes so that there's time for questioning. All right. And sometimes when it gets too long, people can get bored. I had 15 for you guys. I don't want to miss anything. All right. So let's go to number 11. Number 11 doesn't always apply to everyone, but if you're a business owner who had some additional money this year, you can always contribute to a solo 401k. All right. The limits have been increased significantly. If you made a good amount of profit, please consider contributing to your solo 401k. It's a great way to save for retirement and also to reduce your tax liability. All right. I don't want to spend too much time on the numbers, but the numbers have really gone up where you can contribute up to $23,500. If you're over the age of 50, you can do an additional $7,500, and that now gets matched. So you do the contribution for you as the employee if you're an S corp, and then now you do the other section for the employer. So definitely something to think about. It's a great way to save on taxes. All right. Then my next one, the 12th one for you guys, if you need a car for your business, this is a good time to buy it. All right. The bonus depreciation has been brought back with the new tax law. And by the way, I'm going to be talking about the new tax law this week. Don't miss this one, guys, because a lot of us have not really sat down to understand what is in the new tax law and how it's going to impact us as individuals and business owners. I'm going to be breaking it down on Thursday. Yeah, I'll make sure the team confirms. But on Thursday, prayerfully. And please, if you can attend, but you'll always be able to watch it. I will break down the new tax law so you know how it impacts your business. But let me go back to number 12. So with this new tax law, the bonus depreciation allows you to be able to write off, let's say, your car completely in the year that you purchased the car. No matter whether you've made payments on the car, whether if you left, even if you only gave down payment or you didn't give down payment, so long as you've signed the documents taking that car out of the parking lot and you're using it exclusively for business, you can write off 100% of that car. If you use it 50% for business, you can write off 50% of the value of that car in that year. That's your 100% bonus depreciation. This is really good for someone that had a good year. Okay, very profitable. I'm not one of those people. I'll tell a business person to just buy a car because you want to save on taxes. Just because if you're going to be profitable every year, Let's leverage different strategies. Just don't buy a car and then next year, now what do we do? You can write it off over a period of time, but there are other strategies to leverage. Don't go and get a car and incur additional expense, or get a big debt on your head just because you want to take advantage of this. That's why it has to start with you knowing your numbers, because if you know your numbers, then you know which strategies you need to implement and which strategies you shouldn't be implementing. Okay, now for someone who had a good year and they need that car for their business, please by all means get it before the year is over. Okay, but if it doesn't benefit you this year, you can wait till next year and still get the car. All right, then my 13th one for you is for you to, oh, I love this one, set up, or make sure, if you did set it up, if you listened to me last year and you set it up, make sure you do a health reimbursement account. Set it up, or if you had set it up last year, then make sure that you reimburse yourself before the year is over. I really like this strategy. Okay, so the health reimbursement account is an amazing plan where business owners, especially if you had like a high medical bill, your business can reimburse you for that expense. Okay, and when you get that money, it's tax free to you, but you have to make sure that it is set up. So please, if you did set it up last year, you want to make sure the reimbursement is done before December 31st. If you didn't, then this is a good time for you to explore setting one up, because it's a great way for you to still get, again, your money out of your business to cover any medical expenses that were incurred out of pocket, right? Because for those that itemize on taxes, a lot of times you're not able to even itemize your medical expenses because it has to be from over a 7.5% of your AGI. That's your adjusted gross income. A lot of people, their medical bills are not that high, right? So if, let's say, you made $50,000 and your medical bill was just $3,000, that's still a good amount of money you spent out of pocket. But if you're itemizing, you might not be able to use that per se. But now, if you're doing the reimbursement plan through your business, then you can get that money back in your account. It's tax-free to you and your business can get the deduction. So please, if you did set it up when I talked about it last year, make sure you do the reimbursement check before the year is over. If you didn't, this is a good time to consider it. All right. Number 14 is, oh my God, I have so many. Jeez. All right. Number 14, guys, this is huge. Please go ahead and review the federal and state credits that are available for your business. Oh man, I wish I could stand up and just and scream about this. Guys, there are so many credits that are available for the business owner that we're not taking advantage of. Okay, for example, we have what we call R&D, right? That's R&D, research and development credit. Sometimes business owners think, oh, I need to be in production, I need to be in manufacturing and be in the process of research and development to take advantage of this. No, let me tell you something. Even if you're a consultant and you improve your processes and you document the studying and everything you did to improve your processes, if maybe you met with consultants as well, those are all part of R&D. Please take advantage. Okay, there are so many different R&Ds. I'll put a list together. I think I've done one before, but I'll put a list together so you know which one you can take advantage of and really leverage as a business owner. So many of us are winging, we're really playing with these. If you're able to go in and document your processes, there you go. If you're starting a new business, you do research on where to set up your location. All of these are all part of R&D. Don't think R&D has to be this complicated process where it's only for IT companies or, for people that want to go into oil and gas production. No, it applies even to us, the business owners. Okay, there are credits for you hiring different groups of people. So let's say if you hire like veterans in your business, if you hire like disabled people, even people that, former like convicts, people that were in jail and came back and you're trying to help them get back on their feet. I know so many business owners that hire people like that. I talk to you guys all the time. There are credits for you. So please, this is a good time. There's so many credits. I don't have time to go through it, but I'm encouraging you, if you get to watch this video, I want you to maybe send an email to us, or I'll try to put the list as well on this video so you can go through and check what can I apply for, and even if you cannot, how can I set my business up so going forward I can take advantage of these. Right now, there are even credits where if you have a physical location and you have to make adjustments for your locations where people who are handicapped can be able to use, can be able to come in safely without being inconvenienced, you get credits for that. So if you're a business owner and you're watching this, I just want you to take time before the year is over to review what credits are applicable to you. There are a lot of state credits that you may not have known about. Please check those. Okay, the list is so long, so I'm not going to spend too much time on it, but I hope that this causes you to do a bit of research. All right, and then my last one for you, which is obvious, is make sure that you're meeting with a CPA before the year is over. You know, like right now we're doing mock taxes where we can literally run your numbers and you have a good idea of where you're supposed to be next year. But it doesn't end there. This is the time to talk about strategies. This is the time to look at your business entity structure. Should I make an election? Should I be an S corp? What happens? You know, should I redomesticate my entity? As I said to you, you don't want to wait until tax season to go talk to a CPA or a tax strategist. No, you want to do it now before the year is over. So if there are any specific strategies that you could leverage, this is a good time. And then you can also plan ahead, right? I gave you an example that we talked about hiring your kids in your business. I always give this as a good example. There are people that come to me and they'll tell me, oh, I want to go ahead and become an S corp, right? I want to file the election to become an S corp. But this person has 2 or 3 kids. The S corp will help you to save on self-employment taxes. But if you have 2 or 3 kids that can work in your business, are you kidding? That's about $30,000 in tax savings. You don't need to become an S corp. You're better off staying as a single member LLC. So that way you simplify the process of hiring your kids. Now, doesn't mean if you become an S corp, you cannot still hire your kids. We have a backdoor method called the family management plan. Which you can, if you could get my book, you're going to see how to do it. But I'm just saying, this is why you talk to a CPA, because based on what your specific situation is as an individual, we'll now customize a plan that aligns with you, not only for what is going on in your life, but also with your goals, right? I tell every business person, taxes are filed every year, which means your strategies should align with your goals for the next year. That's why you don't wait till next year. So if next year you're planning to buy a property, you and I should put plans in place now for you to be able to qualify to buy for the property, but to buy the property next year. Okay? We don't get to next year and you're like, oh, I need to, what can I do to qualify? No, we plan ahead. So that's why meeting with a CPA and being proactive is my number 15, which I think is so important for you as a business person. I know sometimes business people tell me, but it's expensive. I'll tell you, if you're going to spend $200, $300, $500 to talk to someone who can help you save over 30 plus more tax dollars in 30 or more thousand in taxes, not just for 1 year, but many years to come, I think is worth it. Right? So I'm going to go ahead and stop right here and see if there are any questions that I need to answer. You guys have been awesome. So, you know, my system is slightly different. I think it's good that the team does it this way. So that way I don't get distracted, because when I see questions, I'll get hyped up. Now, let me go ahead and see if there's any. Okay, how do I, you guys show me, please. How do I put this up on here? Do I go to this chat here? Please help me put it up. I think you took it off. Can they hear me? Anyways, okay, yes, here they are now. Good, it's coming up, you guys. Just bear with me. I want to make sure I don't miss anything. Okay. Oh, Anita, hey, I see you. Anita is here. Stacy Vine, thank you for being here. Let me see here. Maybe I should try using my phone. You see how these complete systems are. You guys, please forgive me, or even me like that. I'm not that tech savvy. Let me see on my phone. So on here, I think we have, all right, let's see. Okay, but if I put it on, it's going to come. So I'm scrolling down. Is there any way to scroll so I can see anything at the bottom? I'm trying to use my phone here, but doesn't seem like I can. Oh, snap. I'm trying to put this so it comes on. But okay, guys, I don't think I'm able to see these questions. I don't know what I'm doing wrong. Okay, let me mute myself on the phone here. Okay. All right, so I think this is good. I'm not seeing any questions here. All right, so it looks good. No questions that I'm seeing here. Thank you guys so much, everyone who came on. Remember, I do offer the complimentary 15 minutes meetings where you can take advantage of that. You don't have to be our client to do it. That is my give. my gift to the business community. People are always surprised when they come on because they're like, CPAs don't do this. I'm like, well, look, I'm all for the community. I'm all for everyone winning. You don't have to be a client to schedule these meetings. Please come on. If you have a question, come ask me your questions. I'm always happy to provide guidance or lead you the right path, which way to go. So take advantage of the 15-minute meetings. Even if you're not a business owner, this is a good time for you to look at your W-4 at your job. I'm happy to review it with you as well, because sometimes people who are employees, they don't feel this paperwork well and they end up owing a lot in taxes. I provide that kind of guidance as well. Okay, so if you have any questions, if you just want to pick on my brain, I'm happy to provide the 15 minutes for you. Please take advantage of it. All right, so I think we're good here. Thank you all for the beautiful comments. It's so encouraging, and this is it. Thank you all for being here. Bye-bye. This has been another amazing session of Tax Conversations with Dr. Lilly Mbinglo, Abakwa's finest CPA. It's just purely an honor, and always just it gives me so much joy to serve our business community. And I hope that you guys, you all win, because I want us to win. There's so much out there for us to succeed if we talk to the right people, get into the right room. So please leverage me. Let me be a resource for you. Empty my brain. That's how I always say it. I don't want to leave with any of this information. Empty my brain, whatever I can do to support your journey as an entrepreneur, as a business person. You guys, please leverage this resource for you. All right, thank you all. Have an amazing Sunday. Bye.